On the 1st of May this year, a piece of legislation that landlords had been warned about for close to 4 years finally took effect, and the single tool that underpinned the entire private rental business model in England for nearly 40 decades quietly disappeared. Section 21, the no-fault eviction notice, is gone. Every fixed-term short-hold tenancy in the country automatically converted into a rolling periodic tenancy on that date, whether the landlord wanted it to or not. And from that moment forward, ending a tenancy without a specific, provable legal reason simply stopped being an option. This is not a proposal anymore. It is not a bill working its way through Parliament. It is live law, already reshaping how landlords across England are actually running their portfolios. I have been tracking the UK property market for years, and this video is not about whether the reform is good or bad policy. That debate has already happened, and the outcome has already landed. This video is about what is actually happening on the ground right now in real portfolios as landlords respond to a rental market with fundamentally different rules than the one most of them built their entire strategy around. Let's start with exactly what changed, because the practical mechanics matter enormously here. Before the 1st of May, a landlord letting on an assured short-hold tenancy could, once any fixed term had ended, or in many cases even during it depending on the specific tenancy structure, serve a Section 21 notice requiring the tenant to leave without providing any reason at all. No proof of rent arrears, no proof of antisocial behaviour, no proof of wanting to sell, nothing, just 2 months' notice and a correctly completed form. That mechanism is now completely unavailable. Every assured short-hold tenancy that existed before the 1st of May automatically converted into an assured periodic tenancy, meaning there is no longer a fixed end date at all, and landlords wanting to regain possession must now serve a Section 8 notice citing one or more specific legal grounds, which the government significantly expanded and restructured as part of the same reform, moving from roughly 17 grounds under the old system to well over 30 under the new one. To make this concrete, consider a landlord who, under the old system, had a tenant who was consistently a few weeks late with rent, never quite late enough to comfortably clear the old mandatory arrears threshold, but reliably enough to be a persistent source of stress and cash flow disruption. Under the old rules, that landlord had a simple, practical option available regardless of how the arrears case might have played out in court. Serve a Section 21 notice, wait out the notice period, and bring the tenancy to a clean, low-conflict end without ever needing to prove anything about the tenant's specific conduct. Under the new rules, that exact same landlord facing that exact same pattern of persistent low-level arrears has no equivalent option. The mandatory arrears ground requires a considerably higher threshold to be met, and short of reaching that threshold or being able to establish one of the other specific discretionary grounds with sufficient evidence to satisfy a court, that landlord is now required to continue the tenancy indefinitely, absorbing the ongoing cash flow disruption in a way the old system never forced them to. Red flag number 1 for landlords adjusting to this, and it is the one causing the most immediate operational friction: the arrears threshold and notice period changes. Under the previous rules, landlords could pursue possession for rent arrears once a tenant fell behind by a specific lower threshold, and could combine that with the flexibility of Section 21 as a backup route if the arrears case proved difficult to prove or the tenant caught up just enough to complicate matters. Under the new rules, the mandatory rent arrears ground requires tenants to be in arrears equivalent to roughly 3 months' rent at the point the case reaches court, not just at the point notice is served, and the notice period for that ground has effectively doubled to 4 weeks. Landlords who were used to a relatively fast, largely discretion-free route to dealing with a tenant who stopped paying are now navigating a considerably longer, more procedurally demanding process, precisely at the moment a non-paying tenant is causing them the most financial strain. Red flag number 2, the sale and family occupation grounds, and how landlords are actually using them. 2 of the more commonly used grounds under the new system allow a landlord to seek possession because they intend to sell the property, or because they or a close family member intend to move in. These grounds exist specifically to preserve a landlord's ability to manage their own asset for legitimate personal or commercial reasons, separate from any dispute with the tenant. What has emerged in practice, according to brokers and letting agents I have spoken with, is a meaningfully higher volume of landlords now formally citing an intention to sell as their stated reason for ending a tenancy, in situations where, under the old system, they would simply have used Section 21 without needing to specify any reason at all. Whether every one of those stated intentions to sell genuinely reflects a firm decision to sell, or whether some landlords are using the ground as the most straightforward currently available route to ending a tenancy they would previously have ended without needing to justify it, is a question tenant advocacy groups are already raising, and one that is likely to generate legal challenge and scrutiny over the coming months as more cases work through the courts. Estate agents handling instructions on properties recently vacated under this ground report being asked with increasing frequency whether a quick, discounted sale to a cash buyer might be preferable to a standard marketed sale, a pattern that itself raises questions about how genuinely considered some of these sale decisions actually were at the point the possession notice was originally served, versus how much the notice functioned as the fastest available route to ending a tenancy the landlord had already decided, for other reasons, that they wanted to end.
Red flag number 3, the restriction on reletting after a sale ground possession. To prevent the sale ground from being used as a loophole, if a landlord regains possession by citing an intention to sell and then does not actually sell, or attempts to relet the property to a new tenant within a defined restricted period, generally expected to run around 12 months, they can face financial penalties, and the previous tenant may have grounds to challenge the eviction after the fact. This creates a genuinely important behavioral shift for landlords to understand. Citing the sale ground is no longer a low-commitment, low-risk route to ending a tenancy quickly. It now carries a meaningful compliance obligation attached to it, and landlords who cite it without a genuine, followed-through intention to sell are exposing themselves to real financial and legal risk that simply did not exist under the old Section 21 system, a meaningful deterrent for landlords tempted to treat the ground as a convenient shortcut rather than a genuine statement of intent. Red flag number 5, the rise of the landlord database and what it means for compliance. The reform also introduced a private rented sector database that landlords are required to register on if they want to rely on certain grounds for possession, alongside a new landlord ombudsman scheme designed to handle disputes outside the court system. Registration and ongoing compliance with this database adds a new administrative layer that did not previously exist, and letting agents report that a meaningful number of smaller, less professionally organized landlords, particularly those managing just 1 or 2 properties without an agent, are struggling to keep pace with the new compliance requirements, creating a genuine risk that some landlords may inadvertently lose access to certain possession grounds simply through administrative oversight, rather than any underlying dispute with their tenant.
Red flag number 6, and this is where landlord behaviour is shifting most visibly, a meaningful acceleration in exits from the sector entirely. Surveys of landlord sentiment conducted around the implementation date consistently show a significant share of smaller portfolio landlords, particularly those who own just 1 or 2 properties as a form of retirement or supplementary income, indicating an intention to sell up rather than continue operating under the new rules. Brokers and estate agents report a genuine measurable increase in previously rented properties coming onto the sales market in the months immediately following implementation, though it remains too early, this soon after the change, to say definitively how much of that increase reflects landlords citing the sale ground for tenancies they were already planning to end versus a broader structural decision by smaller landlords to leave the sector altogether rather than adapt to the new compliance burden. Red flag number 8 is the rent increase mechanism and how landlords are adapting their pricing strategy around it. Under the new system, rent increases can only be implemented once per year and only through a formal Section 13 notice process, which gives tenants a formal route to challenge an increase they consider unreasonable through a tribunal. This has visibly shifted how some landlords approach rent setting at the point a new tenancy begins, with letting agents reporting a tendency towards setting initial rents somewhat higher than they might previously have done, to build in a buffer against the reduced flexibility to adjust pricing during the tenancy, since landlords can no longer rely on periodic renewal points to reset the rent to current market levels the way some previously did under rolling fixed-term arrangements. Red flag number 9, the practical reality of the expanded antisocial behaviour and rent arrears grounds and why they are proving harder to use in practice than landlords initially expected.
While the reform did expand and in some cases strengthen the grounds available for dealing with genuinely problematic tenancies, actually using those grounds successfully still requires landlords to build and present a properly documented case in court, something the old Section 21 route never required at all. Letting agents describe a learning curve among landlords and even among some smaller agencies who have limited previous experience serving Section 8 notices, since a meaningful share of the market previously relied almost exclusively on Section 21 and rarely needed to build a full evidential case for possession. That inexperience is translating into slower, more error-prone possession proceedings in the months immediately following implementation, as landlords, agents, and in some cases even the courts themselves work through the practical kinks of a genuinely new legal process operating at national scale for the first time. Red flag number 10, and this one is emerging as a direct commercial response to everything covered so far, the rapid growth of specialist rent protection and legal expenses insurance products aimed specifically at landlords navigating the new possession framework. With the standard route to ending a problematic tenancy now slower and more procedurally demanding, and with genuine financial exposure attached to a tenant who stops paying rent while a lengthy Section 8 process plays out, insurers have moved quickly to market products designed to cover lost rental income and legal costs during exactly this kind of extended dispute. Landlords increasingly treat this kind of cover as a near-essential addition to their standard buildings insurance, rather than the optional extra it was often considered before the reform, and letting agents report that recommending this kind of protection has become a standard part of onboarding new landlord clients, precisely because the financial consequences of an unprotected, drawn-out possession case have become meaningfully more severe under the new system than they were before. Now, here is the part that connects all of these shifts together, and it is worth stating plainly. The removal of Section 21 has not eliminated a landlord's ability to end a tenancy. It has replaced an unconditional, no-questions-asked mechanism with a conditional, evidence-based one. And that shift changes the underlying economics and risk profile of being a landlord in a way that goes well beyond the mechanics of any single eviction case. A landlord's ability to correct a bad tenant selection, respond to a change in personal circumstances, or simply manage their asset flexibly is now meaningfully more constrained than it was before the 1st of May, and landlords across the market are visibly recalibrating their entire approach, from tenant selection through to pricing, through to, in a significant number of cases, their fundamental decision about whether remaining a landlord is still worthwhile at all. I spoke with a letting agent who manages a substantial portfolio across several counties, and off the record, her assessment was direct. She said the single biggest shift she has observed since implementation is not any one specific rule change, but a broader change in landlord psychology. She said landlords who previously treated a rental property as a relatively liquid, flexible asset, one they could exit from a specific tenancy relatively easily if circumstances changed, now increasingly view every new tenancy they enter into as a considerably longer-term commitment, one that requires far more upfront diligence precisely because unwinding it later if things go wrong is now a meaningfully harder and slower process than it used to be. She said this shift in psychology is already visible in the questions landlords ask her before agreeing to let a property, with considerably more focus now on tenant stability and reference quality than on simply filling a vacancy quickly, even where that more cautious approach means a property sits empty for a few additional weeks while a more thorough selection process plays out. She also described a noticeable shift in how landlords now think about tenants with less conventional employment situations, self-employed applicants, those on probationary periods in new jobs, or younger tenants without an extensive rental history, all of whom, she said, are increasingly finding themselves at a disadvantage compared to before the reform, not because any landlord has anything specifically against them, but because in a world where selecting badly is now considerably harder to correct, landlords are gravitating toward the applicants who look, on paper, like the lowest possible risk, even where that instinct works against otherwise perfectly reliable prospective tenants who simply do not fit the most conventional profile.
She raised a further point about how this is playing out specifically among landlords who own properties jointly with a partner or as part of a small family arrangement, rather than through a limited company structure. She said these landlords, often less professionally organized than larger portfolio operators or institutional investors, are disproportionately represented among those choosing to exit the sector entirely following the reform, partly because the compliance burden, database registration, ombudsman engagement, more complex possession procedures, falls relatively harder on landlords managing everything personally without dedicated administrative support, compared to a larger operator who can simply absorb these new requirements into an existing compliance function built to handle exactly this kind of regulatory change.
So, what does this actually mean if you are a landlord navigating this new system, or a tenant trying to understand how your own landlord is likely to behave under it? First, if you are a landlord, review your current tenancy documentation now if you have not already done so, because every existing assured shorthold tenancy converted automatically to a periodic tenancy on the implementation date, and there are specific information and documentation obligations attached to that conversion that carry meaningful financial penalties if missed. Second, familiarize yourself thoroughly with the specific evidential requirements of whichever Section 8 ground is most likely to be relevant to your situation before you actually need to use it, because building a case retrospectively after a dispute has already escalated is considerably harder than understanding the requirements and keeping appropriate documentation from the outset of a tenancy. Third, if you are considering citing the sale ground to end a tenancy, be genuinely clear with yourself and your advisors about your actual intention to sell, and understand the restricted reletting period and associated penalties before proceeding, because this ground now carries real accountability attached to it that did not exist under the old system. Fourth, if you manage your own properties without an agent, seriously consider whether the database registration and ongoing compliance requirements are something you can realistically keep on top of alone, or whether professional management support has become a more worthwhile investment under the new regime than it may have seemed under the old one. Fifth, if you are a tenant, understand that your landlord's ability to end your tenancy without a specific reason has genuinely gone, which materially changes your negotiating position and your security. But also understand that a landlord acting under one of the available Section 8 grounds is not automatically doing something improper, so it is worth understanding the specific ground being cited and your own rights in response to it, rather than assuming any notice you receive is necessarily unlawful simply because Section 21 no longer exists. Sixth, whether you're a landlord or a tenant, keep detailed, dated written records of every significant interaction relating to the tenancy, rent payments, maintenance requests, any communication about arrears or disputes, because the shift toward an evidence-based possession system means documentation quality now matters considerably more for both parties than it did when Section 21 offered landlords a route that bypassed the need to prove anything at all, and it applies just as much to tenants seeking to protect themselves as it does to landlords seeking to protect their position. Seventh, landlords with portfolios spanning multiple properties should consider auditing their entire book now, tenancy by tenancy, to identify which properties might realistically need a Section 8 ground invoked at some point in the near future, and to start building the necessary documentation proactively, rather than waiting until a dispute has already escalated to the point where possession action feels urgent and unavoidable. Here is how I expect this to develop over the next few years. Expect continued attrition among smaller, less professionally organised landlords as the accumulated weight of this reform, alongside other pressures already covered on this channel, taxation changes, tighter mortgage criteria for buy-to-let, rising compliance costs, continues to make small-scale, part-time landlordism a progressively less attractive proposition. Expect continued consolidation of the rental sector toward larger, more professionally managed portfolios and institutional build-to-rent operators better equipped to absorb the compliance burden this reform introduces. Expect the courts to face a genuine adjustment period as Section 8 possession claims, now the only route available, increase significantly in volume compared to the pre-reform baseline, potentially creating longer waiting times for landlords with genuinely legitimate possession cases, an outcome that would be a real irony given the reform's stated aim of creating a fairer, more efficient system for all parties. And expect the sale ground in particular to attract continued scrutiny and potential future legal challenge as tenant advocacy groups and the courts work through cases testing exactly how rigorously that ground's follow-through requirements will actually be enforced in practice. There is also a slower-moving regional dimension to this transition worth watching. Early indications suggest the impact of this reform is not landing evenly across the country. Areas with a historically higher concentration of small individual landlords rather than larger portfolio operators or institutional investment appear to be experiencing a proportionally larger wave of landlord exits and associated property sales, since those are precisely the areas where the compliance burden falls hardest on operators least equipped to absorb it. Over time, this could produce a genuinely uneven national picture, with some regions seeing meaningful consolidation toward larger, more professional rental operators relatively quickly, while other regions retain a more traditional, fragmented landlord base for considerably longer, simply because the underlying pressures pushing consolidation are not evenly distributed across the country. It is also worth watching how mortgage lenders respond to this changed landscape over the medium term, since buy-to-let lending criteria have historically factored in a landlord's practical ability to manage void periods and problematic tenancies as part of their overall risk assessment. If lenders begin to view the extended timelines and evidential requirements of the new possession system as a meaningful additional risk factor, that could feed through into buy-to-let mortgage pricing and availability in ways that further reinforce the broader consolidation trend already underway, making it progressively harder for smaller individual landlords to access competitive financing even where they are otherwise well placed to continue operating within the new rules.
The uncomfortable truth underneath all of this is that abolishing Section 21 was never simply a tenant protection measure operating in isolation. It was a fundamental rewiring of the risk and flexibility calculation that has underpinned private landlordism in England for nearly 40 years. And like any fundamental rewiring of a market's core mechanics, it is producing consequences well beyond its immediate stated purpose, reshaping who remains a landlord, how they select tenants, how they price their properties, and how quickly a genuinely problematic tenancy can actually be resolved through the courts. Whether this ultimately produces the fairer, more secure rental market the reform was designed to create, or whether it primarily accelerates the exit of smaller landlords in favor of larger institutional operators with their own distinct set of priorities, is a question that will only be properly answerable once several more years of real-world data have accumulated. For now, every landlord and every tenant in England is living inside a genuinely new set of rules, still being tested, still being interpreted by the courts case by case, and still being adapted to in real time by an industry that spent nearly 4 decades operating under a fundamentally different logic. If there is a single takeaway for landlords navigating this new environment, it is that the flexibility Section 21 quietly provided was never fully priced into how most landlords thought about risk, because it rarely needed to be exercised to still be valuable. It functioned as a background safety net that made every other decision, tenant selection, pricing, day-to-day management, feel lower stakes than it actually was. That safety net is gone, and the landlords adapting most successfully are not the ones searching for some equivalent replacement mechanism because none genuinely exists, but the ones treating every stage of the letting process, from initial tenant selection through to ongoing documentation, with the level of care and formality that the new legal framework now effectively demands. For tenants, the practical reality is a meaningfully more secure position than existed before the 1st of May, though one still bounded by a landlord's genuine and lawful right to regain their property under the newly expanded set of specific circumstances, a balance that both sides of the rental market are still actively learning to navigate, case by case, month by month, as this new system beds in.